is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. This quote's by Albert Ferretti. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We have the Dow Industrials up 285, NASDAQ up 55, S&Ps are up 28. Gold contract down $14.70, traded at $1,186 an ounce. Silver down 34 cents at $16.72 an ounce. Platinum off 18 at $1,120 an ounce. Copper flat at $2.77 a pound. Light sweet crude off 31 cents at $48.55 a barrel. Bonds, we have the 10-year down one tick, 128.20, 30 off 28 ticks at 163.17, and King Dollar up 770 ticks, trading out at 98.29. The euro's down 70 at 108. And the yen is trading up a full point at 120.18. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Where do we want to start? Let's start with the SPY, folks. What we have happening, you get a market bouncing, no doubt. Percentage-wise, where we stand right now is this. You have the Dow Industrials up 1.6%, the NASDAQ is up 1.2%, and NASDAQ is up 1.1%, and the S&Ps are up 1.2%. You go over to the SPY. You got window dressing in spades, by the way, folks. That's what we have happening here. You're up 60, we get 63 million shares traded. You're going against 159 million. We're trading out right now at 208.52. And what I expect you're going to see here, this is going to try to get into the lows of the highs. That low of the high is basically 210. So you get another $1.50 on the way up. We'll see how it can handle, first off, the beginning of that downdraft. Well, that's actually the second day of that downdraft from last week. That high there is 209.35. We haven't made it up to that point yet, but I expect you're probably going to get a little above that point into the lows, and then that's right there where you're going to give it up. And what that is also, folks, is where we had come down on March 6th. That's how that's playing out. So the March 6th downdraft, the high of that downdraft is 209.94. The high of the downdraft from last week is 209.35. The bottom of the high of last week is 210. So that's the area that I expect that supply line is going to come right back at the marketplace. We go look at the NDX 100. We use the 3 Qs inside the NDX 100. Now, the NDX 100 is weak. NDX 100 also came off 2 separate highs with real juice. When we came down, right now the 3 Qs are trading 106.73. We had come down on the 6th of March, the 10th of March, we had come down with 34 million shares. Last week, we come down with 41 million shares. We're going to do about 30 million shares. Now, the high of the downdraft of last week is 108.20. I don't see it. It doesn't look to me like it's going to make it there. What it could very well do is this. When we gap down on March 9th, the market had closed on March 8th, March 9th rather, at 107.72. We opened the following day at 106.95. it can get right into that gap. That's where I suspect it's going to try to get into. We look at the IWM, the Russell 2000. Now, the Russell 2000 had broken out, went above all the consolidation that it had been in, that consolidation from March 2nd, took it out. Then what it did is this. It came off the highs with volume. Last week we came down from the 125.60 area to the 122 area with 42 million shares. This is really cool. This is bouncing, folks, on 12 million. Now, it looks like it's the same thing. It wants to make the price, the 125.79, or in fact the high of that 126.32, looks like it is game on the IWM. If you pay attention to the NASDAQ, if you like the composite, well, guess what? We got to go to the IBB, because the IBB, folks, the NASDAQ Biotech Index, came off the highs last week. And the way this equity trades, okay, this indice trades, it's been on a tear. I mean, it's been on an incredible tear. When this comes down, though, man, get out of the way. Okay, so in 4 days, we went from 374 down to 333. $60. 374. No, 45 bucks. Now, we're bouncing. You're bouncing on light volume. What we've done out here today, thus far, you're at 1.7 million shares. The 1.7 million shares is coming into the downdraft that had, I believe it's 4-point-something million. Let me see what we got. Yeah, 4.8 million and 5.2 million. So the biotechs, I do expect also at the biotechs are going to try to make it to the low of their high, which is right now we're at 350. That low of that high is up there at 363. So it's a big number. And I expect as you see that, you're going to see the volume contract as we're going into it. Now, what we have out here this week also is that you have the markets closed Good Friday, so you have a short week. The market participants will be splitting out of here on Thursday in the morning, okay? So I suspect you very, very well could rally up into that area. And then it'll be next week where we'll see a little bit of destruction coming in. Gold contract. Let's go over and take a look at gold. What you have with gold is this. Gold contract is down $14.50 out here. And guess what? You're down with dramatically lighter volume. This little baby, and in fact, the equities, it's pretty amazing that with gold, not that it's down a lot, but it's still down $15. And psychologically, it is having a real problem staying over this 1,200. That being said, you know what? You're only down with 120,000 contracts. That 120,000 contracts is basically coming into, you did 134? Yeah, we did 134, pushing the highs. We're coming into 89,000 contracts. If we go to the GLD, see, we're flipping contracts right now, so we have to go to the GLD simultaneously. And you look at the GLD, what you have with the GLD, which trades at 10% of the price of gold, you're going to see you have 3 million shares. The 3 million shares is coming into yeah, this is sweet. The 3 million is coming into 8 million shares and coming into 12 million shares. You're going to need a lot more volume to basically smoke these equities down. The amazing part actually is that the equities, some of these equities are actually up, folks. Okay, which is pretty wild. Okay, bonds. Now this is going to be the wild card, folks, and this is what it is. The bond market came off its highs, and it came off those highs and had some volume when we take a look at this. But what also happened is this. So on February 6th, you came down, and you came down with some real juice inside the marketplace. We came out, the 10-year came off a high of 130.19. You came down with some juice on February 6th. You got to a lower price point and basically took out an ABC structure on the way down on March 6th. Then what you had is this. Then you had March 18th when the Fed came out with their statement saying they're taking patience out of it. The 10-year, the 30-year the TLT all went topside with volume. Now, if we take a look at the TLT, so that all these, in case you don't have futures, what you're going to see is this. And this is going to be really crucial to get your head wrapped around as to, okay, has the larger trend changed inside the bond market? My take was that when we saw that break the B point, that the yard had changed. Then that sign of strength came in. It's like, you know what, man, it's not over yet. This is going to give us a lot of information this week. The reason being is this. You're coming into the downdraft of February 6th. You're coming into the updraft of March 18th. You're building some cars right now. So the real key is going to be, will it have enough juice to get up and over these levels? You stay right there. This is Tom O'Brien. This is TFNN. We're going to be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 286, Nasdaq's up 54, S&Ps are up 24. Inside the Dow Industrials, folks, this is what you have moving the market. J.P. Morgan Chase is the leader out there. That's up $1.75. Boeing is second, up 412. Chevron is next, up 272, and ExxonMobil's up 213. Now, the weakness inside the Dow, Intel is down 54. Visa is up 13. Microsoft is up 14. And American Express is up 32. So you can see the diversity and divergence inside there. It's pretty intense. And what it is, specifically, is Intel has no juice whatsoever. Visa has no juice. Microsoft has no juice. American Express has no juice. That's going to be problematic as soon as this market turns, because those things are weak dogs in an incredible way. Inside the NDX 100, what do we have? Citrix. Citrix is up $11. Oh, no. Catamaran. Catamaran's getting taken over by United Health. That is up $11.53. That's driving the NDX 100 today. ADI is second. Analog Devices, that's up $5.65 at $64.49. Express Scripts is up $3 at $85.39, and Staples is up 56 cents at $16.88. Now, taken away from it on the way down, you get Altera. Altera is down $1.93. Now, Altera exploded topside, is actually up 20% on Friday on the rumors that Intel may take it over. More than likely, that's going to probably come up to fruition. Mylan Pharmaceutical is down $1.73. You get Intel down 52, and you got Alexa Pharmaceutical off 146. Inside the banking structure out here, I'll tell you, it's amazing when you actually do, whether it's looking at the, well, here, let's go over and we're going to pull up a few banks here. So we'll pull up American Express first, AXP, not that this is a bank, but we'll start pulling up some banks. What you're going to see is this. American Express, bottom line has come from a price point of $95 down to $78. Now, what you have is that you have a high volume low that's hanging out here at $77.12. This is problematic in a huge way for it. What this had already done, is that October 15th swing low. And this is, folks, what has happened is this, is that many of these large caps have come down to the October 15th swing low and taken it out. American Express is one of them. The high volume swing low that American Express had was $78.41 from October 15th. It goes from $78 and goes all the way up to $94. So topped out at $94 in December, had the high volume swing low October 15th. What does it do? Comes all the way back down, does a counter trend bounce up to 86, and then ba-boom, blows this October 15th swing low out with volume. The October 15th swing low had 9 million shares on it. It took it out with 32 million shares. I mean, just took it apart. Now, what's happening right now? It's building cause, and that cause that it's building right now is to get into the area where let me put this on a weekly so you can see this, because this is pretty intense. And it's not the only one, by the way, okay? So this is building cause right now to get into the next consolidation, which is the $71 area. So we'll see how it handles that area. Now, Visa, this one's going to be an interesting one, and this is why. Visa has been huge, okay? And, I mean, they have a business, man. That business is as cool as you can get, meaning it's a transaction type of business. Credit cards just keep getting bigger. So Visa, you want to watch like our heartbeat, and this is why. When we take this, what you're going to see is that it was really subtle 2 weeks ago, but what you had is this. You got to a lower low on Visa, and we had some juice come in the marketplace. We came down with 105 million shares. That's a monster, folks. That is like a huge number. And we'll see whether it penetrates this $60 level. It wants to run to 60. We'll see whether it penetrates it. If you penetrate $60 on Visa, that's going to be problematic in a big way. Bank of America, BAC. We take a look at BAC. Bank of America, that little baby is building cause to get into not only the lower price point, but what you do have with Bank of America, this is another equity that took out its October 15 swing low, took it out with volume after bouncing from 15.43 all the way up to the $18 area. It's trading at 15.57 right now. And, we'll see whether these are multiple ABC structures on the way down. Because the way that they are certainly trading right now, that's exactly what they look like. BRK, Berkshire Hathaway. Now, Berkshire Hathaway is the largest weighting, rather, structure inside the BRK. Inside the BRK. Inside the XLF. Sorry about that, folks. Inside the XLF. So when we take a look at BRK, what you want to be looking at is this. Number one, okay, that is off the highs. She's trading 145 right now. It's 152 the high. Bouncing out here today, and the bounce out here is not bad, by the way. You get 2.3 million shares that you're bouncing on. We'll see whether she can handle this right where she is, actually, 145. 145 to 148 is the number. And we'll see whether she can handle that. What she would have to do is this. At the end of this week, she'd have to be over 146.55 with some good volume behind that move. And we'll see whether she gets enough volume to get up and over that space. Because if she doesn't get enough volume to get up and over that space, what you're going to see is that those financials want to go south. Now, let's go over and we take a look at the XLE. So the XLE, this is the oil and gas infrastructure. Bottom line, XLE out here today. It has some juice into it today. By the way, with oil getting smoked again. Not enough volume though. We're at 78.05. You've done 15 million shares thus far. You're coming into the 27 million. The high there was 74.86. You're over it. So you're going over a high. You're doing it on lighter volume. And what does that set up? It does set up that, yes, you go to the top of the consolidation, 81.17. But what I expect you're going to see up there, you're going to see a rejection of lower price with lighter volume. And the way you're going to have to structure these volumes this week, folks, you got to remember we're going to be closed on Friday. So you basically lay out the 4 days, add another fifth day in after you average out those numbers and see where you come out. When we take a look at the XLE on a weekly basis, you're going to see last week we tried to get to a high with 70 million shares, and we'll see whether we can do more than 70 million this week. The way it's trading today was that you would do some more than 70 million because we get 15.5 million right now. She's going to need 70 million wouldn't be bad. 85 million, 85 million, 90 million. Then you'd have some action that it could try to get into this 79 area. ExxonMobil. When you're looking at the XLE, it's all about ExxonMobil and Chevron. So we take a look at ExxonMobil. ExxonMobil today has price spread. You get 11 million shares, which isn't bad, by the way. So it's like ExxonMobil, you're at 85.74. Yeah, we can get to 86.03. That's basically, that'd still be a dead cat bounce, but you can definitely get to that area. This is Tom O'Brien. This is TFNN window dressing. That's all about, folks. This is a dead cat bounce. 3 or 4 days, we're going south. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get Honeywell up $1.98. You get United Technologies up $2.01. Walmart's up $1.21. Exxon's $2.20. Caterpillar's $1.78. Boeing $3.92. 3M $2.79. Let's go over and take a look at 3M. Take a look at a few of these Dow stocks here. So, there she is. We take a look at 3M. 3M has been up at these highs, and right now what you have is that, okay, so we're up 282. She's been consolidating out here for quite a while. And these ones here that have been consolidating for a long period of time, folks, really get interesting. The reason being is that it's like, okay, you want to break topside. And then, it's interesting because in 3M's case, this is what you have. You have the high volume swing low at October 15th. And, piece by piece, these equities are going down, whacking that baby out. As I just said a little bit earlier, some of them are not only testing it, they're taking it out. In 3M's case, when you actually look at this, see, this is going to be a great one to watch to say, okay, is this market, does it have enough juice to get to higher price and stay to higher price? And this is why. So when you're bisecting and dissecting the market in general, what you want to be looking at is say, okay, we have strong stocks, weak stocks, in-between stocks, all of the above. Well, 3M is a strong one. There's no two ways about it. You're pushing with volume on a weekly basis on December 15th. You're pushing with volume again on a weekly basis on January 30th. You're pushing with volume even 2 weeks ago, because that wasn't a higher high, it wasn't a lower low, that was actually a higher high. That's when 3M went to 167.13. So this one here is certainly pushing with volume. So what you want to watch like a hawk is, can it get over swing points with volume, or does it stall as it gets up to that swing? So what we have with 3M right now, which is really cool because it's going to release a lot of information, is this. 3M on the 20th of March did some really good juice, 4.3 million shares at 167.13. So how we go into that 167.13 is going to be crucial. This is why. We have the wide price spread today. You don't have the expanded volume, okay, but you're not at that level yet. That level, the bottom, well, you're actually at the bottom of that level. The bottom of the level is 165.30. We're at 166.27. So as you get into the 167.13, if that test gets over it, closes under it, and has lighter volume, that's going to be a real problem. It'll be a problem in the context that it will go charge the lower side of its consolidation. You see something like that on a 3M, that'd be problematic. Why? Because 3M is one of the strongest stocks out here. If we go over and take a look at United Technologies, UTX, what you're going to see inside UTX is basically just the opposite. UTX has been weak. It's come off those highs from the 125 area with some juice on the way down. You're bouncing out here today with dramatically lighter volume. You get 2.3 million shares out here today, and you're going into 4.5. Now, I suspect we're at 118.92. Yeah, I can take it over. It can get into somewhere about 120.38. That'll still be basically a dead cat bounce on a market, on an equity in particular, that does want to go to lower price. We go take a look at Big Blue is the ultimate. Big Blue is the ultimate. Big Blue blows my mind, folks. And what it is that what you have is that order, it must be a standing order, and in this particular case, it's at 165. That's the standing order. That's what it looks like. But it doesn't, Big Blue got to 163.60 today, and it's giving it up at that particular point. And what it's done is this: it got over the highs that were generated from this downdraft on the 25th. That's 163.08. We traded to 163.60. You're going to close underneath it. That's showing that Big Blue is even weaker, and that it's going to go after the 157.57 again. And Big Blue has been building cause on a continual basis to try to get into lower price. So it's going to be wild watching how this whole thing shakes out. If we do go into the XAU, the HUI, if you happen to be in those markets, those babies are holding up really well today. It's pretty amazing, actually. It's not that the gold and silver are down dramatically, okay, but the bottom line is that they are down. And as I said a little bit earlier, that psychological 1,200 deal. Bottom line, you get no juice on the way back. And no juice on the way back basically is setting up a higher price in the XAU, in the HUI also. They're both coming back, and they're both coming back with light volume. So we're going to have some divergence out here this week. Right? I do expect it's going to be this week, too, because what you do have, and I'll get those numbers within the next hour, The jobs number is going to be coming out on Friday. I believe we're closed. I don't know if I see the government's not closed, but the market's closed. So they probably the number will still come out. The XAU, the HUI, what they both are doing, they're going into the sign of strength from March 18th, and you're coming into that area with dramatically lighter volume. So the real, will it be able to go to the bottom of that? Yeah, it can. That's 156.70. We'll see whether it goes there. What you certainly have out here today is that it's not budging. Now, let's go to King Dollar, because King Dollar, folks, looks to me like a large ABC structure on the way down. Setting up really nice. What King Dollar has done out here is this. King Dollar today is up 83 ticks, 830 ticks rather. You're doing 38,000 contracts, which is decent, by the way. But guess what? You're coming into 96,000 contracts. You're coming into 87,000 contracts. You're coming into some big numbers. So I suspect what you're going to see here is that you get a small ABC. Well, currency-wise, it's a decent ABC. That'll bring it down. The next leg down will take the dollar index somewhere down to the 95 to 94 area. 95, 96 is the top of the consolidation that it had broken out of, when it had broken out on March 4th. You have the high volume spike from March 18th. That wants to get tested, and we'll see where the rest of it takes it. But the way that baby is set up right now, it wants to get into that level. So the bonds out here, the 10-year bond right now is trading at 1.95. That is saying, guess what? If you do want to refinance, you're looking for houses, go get them, folks. Go get them right now. What I think we have happening here, this is going to be really wild watching this shake out, is inflation, I believe, has not only creeped into the system, it seems that it's going to move rather quickly. The reason I'm saying that is this. Now, check this out. What I've learned is this over the course of years. When real estate moves, right? Real estate, folks, goes like this. Real estate, let me just pull this up. So real estate will go, let's say a house is at 220. What real estate would do, say it's at 220, if there's cash flow and it's worth 220, that's great. But they stay, whatever the appraisal is, whatever the square footage is, that's kind of what it is. And then what happens is that they jump incrementally. And when they jump incrementally, what ends up happening, of course, when something's 200, 250, 150, you jump by 5%, 10%, big numbers. 10% is a really big number. 10% on 200 grand is what? 22 grand. Okay? And they seem to come out of nowhere. Now, I'm not sure what's happening around the rest of the country, but I know inside Florida, we've had the biggest foreclosures in the whole country. And what is happening, and this is even off-season, what is happening, folks, is that we've just seen an incremental jump that is intense. And it's under the covers. It is literally under the covers, because what has happened is that all of a sudden, you talk about a supply squeeze, it is like insane. Now, if I'm right in that aspect that that's what we have happening right now, what you're going to see is you're going to see the amount of cash that is stuffed in pillows or just stuffed anywhere. You're going to see that come out, and the velocity of cash is going to increase dramatically. Because what happens is this, is that with all of us, when you're holding lots of cash, because, and it totally makes sense, by the way, because of the way the downdraft was in 2008. Cash you never can go wrong with. So I'm not saying go spend all the cash, because you never can go wrong with cash. Cash is where it's at. But what also happens is that when expansions come in price, and particularly expansions come in assets, and assets that can be leveraged, guess what? A flurry comes. It comes very quickly. Why? Because anyone that's been through a few cycles knows that when inflation catches, you can raise rates pretty quickly, but your formula is what is the inflation rate, what is the interest rate, what is the leverage rate, and what's the spread? Because when this thing catches, and I think it's caught, it can go much faster than everyone realizes. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials up 275. Nasdaq's up 56. S&Ps are up 27. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are up 274. You get the NASDAQ. Let's see where she is. NASDAQ is up 56. You got the S&Ps up 27. Some of the high-volume stocks in this low-volume market. And this market's going to come in low, folks. Let's see where we're at right now. We take a look at this market. So you got 9 minutes left. We're going to come in about 650 on the NYSE. Right now we're doing 492. On the NASDAQ, we're going to come in at about 1.7. We take a look at the SPY. What you're going to see with the SPY is this. The SPY right now has done 72 million shares. She is coming into, I believe, 156. Yeah, 158. I mean, big numbers here. What you can expect, though, as I said a little bit earlier, is that you can expect slightly higher price even tomorrow. Why? Well, you get the end of the month, the beginning of the next month. The distribution is on, and it's on in spades. The 3Qs are pretty amazing, watching the 3Qs shake out. The reason being is that they're going to try to hide at the highs, but they're going to have a hard time. They came down, with this 41 million deal. You're up on 24, and they really can't get the wide price spread going, and that's really dangerous when you can't get the wide price spread going. What I do expect you'll see, though, is that somehow this baby will get up one more step. Let's go to Marie in Erie, Pennsylvania. Hey, Marie, how are you?
Oh, terrific. Waiting for spring.
And wait, oh, my God, we got to send spring up to you, Marie. Oh, that's terrible.
Well, it's getting there.
It is getting there.
The snow is melting. Yay.
That's great.
I wanted to ask you were talking about inflation.
Yes.
And if inflation is beginning to tick up, wouldn't the TLT go lower?
It would. What would happen there is this. Well, first off, hold it. Did you hold the TLT last week when you called? I know you.
I sold it.
You sold.
I ended up selling it. I got nervous and I
That's
said,
good. No, I know.
Take your money and
I know.
And
okay.
Don't worry about it.
That's cool.
Yeah.
So what seems to be happening is this, is that it looks that, yes, if the Fed puts the interest rates up, which it looks to me like they will, that, yeah, I see that the bonds will go down. Why? Because bottom line is that higher yield is lower bond price, which would be the same in the TLT. I'm having a tough time right now really trying to figure out, has this bond market topped? And it has to do with how we came off the high. We came off the high with big volume, right?
Right.
And then March 18th, it's like, oh, man, hold it. This is not over yet. And so this week, I suspect the market's going to release quite a bit of information. And what it is this. Right where the TLT is right now, you can build cause and get into that 131 area to 132, and if it comes in with strength, then the bond market's not over. It's not over. What you heard me, and it's interesting because you are an investor in the Tiger Real Estate Fund,
right,
okay?
Right.
Is this. This is what has happened this past week in Pinellas County, folks, okay? There's been expansion in price that is like almost crazy. And it's per square foot, and it's right across all the way from the beaches all the way down to St. Pete. And it's a good, let's put it this way, it's a good 10% across the board. And it's shocking. I mean, I'm telling you, it's like, it's blowing my mind. It's great. It's great for us, but it's blowing my mind. I mean, because what happens, folks, we track this every day, and I'm talking the real sales. I'm not talking about what people want for property. I'm talking sales. And the expansion was fast and furious, and what has happened because of that, see, it's going on about 3 or 4 weeks right now, but what has happened because of that there's zero supply. There's a couple subdivisions that there's only 2 houses for sale, and it's like, you got to be kidding me. So I was looking at this over the weekend. I'm saying to myself, I don't believe this. I do believe it, but I don't. Do you know what I mean? But I know it's real, but I saw that and I says, you know what, man? All this cash that's out there, it's getting used right now. So we'll see where that shakes out. I mean, this is only one area, but if that's happening in other parts of the country too, and I think we were lagging anyway, meaning in the real estate part of it. So we'll see where it shakes out, but it's intense.
Well, here in Erie, they were complaining that supply of homes for sale is too low. And so I think that, and we don't change a lot here. We're not like Florida.
No, it doesn't. But, what's interesting is this, is that, one of the targets brought up in the den is that all real estate is local. It absolutely is. But what's important to understand, folks, is that where we are in Pinellas County, out of the whole country, okay, it's the most dense real estate there is in Florida, number one. But guess what? The zip codes that we're in, people always talk about, Connecticut, New York. Well, guess what? These are the richest zip codes in the country also, okay? And if it's taking hold here, meaning inflation's taking hold, it's going to be taking hold, period. So I think in another, whether it's 2 or 3 months, we'll be able to see, is a slew of cash getting basically let loose in the marketplace. So,
can I ask you about CVX?
CVX, yes.
I bought it down at 103, and I was just wondering, you think this is just going to maybe go to the high?
CVX I'd hold right on to. I mean, this is 10 times. The thing that's amazing is that this is much stronger than ExxonMobil.
Right.
It has tested the low that was out there on January 30th. That's a high volume spike, but it tested it. That tested it on the 13th. We did 8 million shares versus 20 million. So it looks to me like, this could make a run to it, that $1.11, And it's interesting that is stronger than ExxonMobil, and that pays a 4% dividend, too. So.
Yeah, it's a sweet thing. Where would you put your stop on this? Under these most recent lows, or would you go where it broke out?
Well, you could. I mean, the best place, but let's see. Why give it that much? 1 second. 102. Yeah, it's under that sign of strength right there. Oh, I know what you can do. 103. You know what to do? Here, put it underneath the high of the low, which is 103.20, 103.28. Put it above that, because you don't want it to get into that high of the low period.
Okay.
Yeah, over that you can do 103.98 or something. Let me just see something. No, do 103.54. Yeah, what I'm doing there is that we're also putting it underneath the lows that were established on Friday.
Okay.
Yeah. Because then you can get that run, particularly this week. You get the market close. This can run to 111 pretty easy. Because the real key is going to be also coming into this weekend. We have a long weekend. Will there be a fair trade on there? We'll see.
Well, thanks a lot, Tom.
Okay, Marie. Have a great one. Have a safe one. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're going to be coming right back. Dow Industrials up 270. Nasdaq up 56. S&Ps are up 26. You stay right there, folks. We're coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We're here 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. We're kicking into April 1st. Pretty amazing. This quote is by an unknown. Expect the best. Believe something good is going to happen, and it usually does. It's all a head game, folks. Market-wise, let's take a look at it out here. We had the Dow Industrials up 263, Nasdaq up 56, S&P's up 23, gold contract down $15.60, trading at $1,185 an ounce. Silver down 36 cents at $16.70 an ounce. Oil off 29 cents at $48.58 a barrel. Bonds, we had the 10-year down 1 tick, 128.20, 30-year off 25 ticks at 163.20, and King Dollar up by 825 ticks, trading out at 98.35. The Euro down 74 at 108, and the Yen up a full penny at 120.15. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Let's go to the world of the markets. What are we going to look at? Well, you know what? I'm going to start off with the Dow Industrials today. Why the Dow? So inside the markets out here, folks, today, Dow had the juice. The Dow is up 1.4%, 1.5, 1.49 to be exact. The S&Ps were up 1.2, and the Nasdaq was up 1.1. If you take a look at the volume characteristic, we did 619 million out here versus 742. If we look at the diamonds, the DIA, what you're going to see inside the diamonds is this. Diamonds today went up 5 million shares versus a downtown on 8.4. That was created out there on the 25th. Now, that being said, it did have the wide price spread. Volume went up a bit. So where does that leave it? That leaves it, folks, I suspect, that the diamonds and the Dow wants to basically try to get up to the 18,000 again. The diamonds want to get into 180.84. Inside the Dow Industrials out here today, this is what you had, putting the strength into it. You had Boeing was up 385. United Health was up 229. Apple was up 312. And you had Chevron up 262. Now, what's so intriguing, however, is this. Many of the Dow stocks were up, and they were up $2, $3, and of course you're talking about stocks that are $100, $150, and you got to remember something. The Dow, that's how it's weighted. It's a price-weighted structure, okay? Bottom line, that being said and done, guess what? Intel can't get out of its way. Intel was down 54 cents. Microsoft can't get out of its way. That was flat. American Express can't get out of its way, and Visa can't get out of its way. Those are going to be problematic, folks. This is a dead cat bounce. I do expect you're going to see that Dow, though, trying to run into the 18,000 level. NDX 100. Let's take a look at the QQQ. If we take a look at the NDX 100, where the strength inside the NDX 100 today was Catamaran. Catamaran's getting taken over by United Health, folks. That was up 1151. That was the leader inside of the NDX 100. Now, even with that, bottom line, the NDX 100 still didn't have big strength. The NDX 100, the Qs had come down from 108 to 105 on the 25th. We had come downtown with 41 million shares, and what we're doing today is that we went uptown with 29 million. Bottom line, can it crawl its way up to like 107.93? Yeah, it can. It can get up another point. Inside that NDX 100, you had Catamaran was the big one. ADI, second, it was good charge. That was up 9% at 597 at 64.81. Express Script was up $3 at 85, and you had Staples was up 58 cents at $16.70. We take a look at the. Let's go to the. We'll go to gold next. We'll take a look at gold. What do we have with gold? Gold, folks. Bottom line, pull back with lighter volume, and what I expect you're going to see is this. Gold contract right now is 1185. This baby can get back into about 1177. 1177 to 1175 is where the strength came in on the 20th, on the 18th. I expect that's what you're going to get. If you take a look at the GLD and see that correlation, you pull back with dramatically lighter volume. It's actually pretty amazing that these gold and silver equities held up today. The GLD came back with 4.3 million shares. That 4.3 million was coming into 8.3 million and 12 million. So bottom line, right now you're trading out at 113.75, and yes, you can get into 112.87. Silver market, look at the SLV, same type of setup inside the silver market. Silver market has actually been stronger than gold. The silver market had broken through the consolidation it was in from February 17th over to the 24th. You pull back today, you're pulling back with 6 million shares versus going uptown with 14 million. This is a nice setup. These setups here, folks, in the metals market, A to B equals C to D, they want to run to the highs that were generated out there on the 21st of January. Bonds. We take a look at the bond market. We use the TLT in bonds. This is going to be a big toss-up, folks, because what we have with the bond market is this. Now, it's going to release a lot of information this week, and this is what it is. We came off the highs in bonds, and, when we came off those highs, you came down pretty hard on the 6th of February. Gap down, came down hard. On the 6th of March, that's when you took a B point out of an ABC structure down. You took it out with volume. Okay, so what ends up happening? Jumps on the other side of it, says, see, I don't want to be here. I don't want to go any lower. Then what you had is that you did have a sign of strength, big sign of strength, on the 18th. That's when the Fed took out patience of its statement. Right where we are right now is going to basically, the information it will release is that, is the bond market over or not? And here's the bull and bear of it. We got to a price point of 131.55. You did volume of 13 million. You backed down with volume of 9 million. So thus far, it's saying that, guess what? It wants to go to the high. How we attack this swing high out here from just last week is going to tell us quite a bit, because what it's going to do is this. That swing high is coming right into the gap where we had gap down from. If you get over, so the bullish one would go like this. The bullish one was that you build costs here for a few more days, you start going into that 131.46 and an expansion with volume. You get that going, this market's not over. That would be saying we're going to go to the highs. Okay, now bearish one. Bearish one would be you build costs for a few more days. You try to get into the 132.78. You fail. You fail, and if you fail and you don't close under the 132.78, you close under the 131.98. Where I'm going with that is the gap where it had originally gapped down from. You close underneath that. What does that set up? That sets up that your probability is higher that the bond market has turned after 28 years, because that's been a 28-year bull market, by the way, folks. Because picture this. This is what's really amazing. This is what it can't get any more bullish, because we went from 14% interest rates down to 0. That's what it did. So you can't go, well, you can go negative. Europe's gone negative. You say you can go negative. I guess you can go negative. But the bottom line, that is the 28-year span. So what does it mean? If the Fed comes up, says short-term rates are up, guess what? That would be the beginning of an expansion of interest rates, even if they're slow. Bottom line, that'll take apart the bond market. Dollar index. Okay, now this is where it's going to get really interesting, and this is what it is. Who knows why the dollar wants to go down? But bottom line is that the dollar had done a 1 to 2 ABC structure on the way up. Those types of expansions, as soon as you get over a 1 to 1.618 expansion or contraction, by the way, you had an immediate change of trend. We got that. The dollar came off the high with a vengeance at 100.78. On March 18th, you get into 98.78 with juice. You bounce today with lighter volume. I suspect what you have here, this is building cause to get into this 95.60 to 94.42 area. The dollar itself is going to release a huge amount of information as to, is in fact going to try for the highs, get up there with light volume, or in fact fall apart and go south. This week we have, we're closed Friday. You get window dressing happening with last 2 days of the month, following 2 days of the new month. What I expect, if we go back to those S&Ps for a second, what I do expect you're going to see the S&Ps trying to crawl a little bit higher. You're going to see the volume drop off as we do it. And when I say drop off, what should specifically happen is that we did 84 million shares today. Tomorrow you'll see lighter than that. The next day you'll see lighter than that. And then that's all she wrote, folks. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. We had the Dow Industrials finish up 263. NASDAQ up 56. S&P's up 26. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And in the world of banks, folks, okay, this is just always amazing. I mean, and I know this happens over and over and over again, but it's just, you have to run through this because it's hard to comprehend sometimes. And where I'm going with this is that, so we went through the banks, the Swiss banks, the Swiss bank accounts, the amount of folks that unfortunately were not paying their taxes, were hiding accounts. Well, last week what you had is that the two guys that actually set this up, so check this out, this is pretty intense. The two guys that actually set this up, going back 20 years, right? One was an accountant and one was worked for the Swiss bank. They set it up. When the IRS actually came in on them, what ended up happening, these are the only two guys that didn't go away because they gave up all their clients, okay? So that was a trip in itself. But listen to this. This one gets even, well, that's kind of how it shook out in a huge way, right? So the guy that creates the whole thing ends up turning everyone else in. Everyone else gets screwed, right? Okay, check this one out, though. So now what you have out here this morning is that you get a lot of other banks that have been basically helping folks not pay taxes. But when you think of it, this is just like this is a flat out now crime. And the thing that's amazing is that there's no doubt if you have enough money and you're a corporation, you are not even going to get charged. Okay, so check this one out. This just came across this morning. So this is First Swiss Bank. First Swiss Bank agreed to pay $221 million and became the first Swiss bank to reach a deal to avoid the Justice Department prosecution by saying how they helped taxpayers duck taxes for decades, including using secret code phrases to access cash. Now, I got to walk you through this because it's just amazing what they get away with. Now, this is a non-prosecution agreement, and that means they cannot get prosecuted. It's part of the U.S. program that lets Swiss escape charges by detailing their cross-border business and information on American accounts. Dozens of banks in the program were watching for the first settlement today. Now watch how they did it, though. This is crazy because this is the total setup. They're going to let this guy go, or they're going to let the whole bank go. Okay. The bank seeks non-prosecuted agreements, which are available to the dozen Swiss banks right now that are under criminal investigation. So there's 12 of them under criminal investigation, including Credit Suisse, who paid already a $2.6 billion fine. But listen to how they did this. This is a trip. So they managed 3,500 U.S. accounts. The peak value is $2.7 billion. They admitted to helping create entities to hide the true owners' accounts. They created offshore debit cards. Now, this is the kicker. This is pretty cool. It's pretty sick, actually. They had offshore credit debit cards. And those credit cards, what they did is this, is that they gave them debit cards with no name on them. Those no-name credit cards could be used to transfer or buy anything anywhere in the country and the world, actually, at $10,000 to $100,000, no, $10,000 to $30,000 per month. Bottom line, when you read this, it's like hard. It's not hard to believe because you know that on a continual basis, what the banks have done, what the banks have got away with, is absolutely amazing. When I read this and I look at this, the folks that are in the can for basically doing things that are like nothing compared to this, it's got to blow their mind. I mean, it's got to absolutely blow their mind. This is the context of free money, lobbying money, all of the above. Because the bottom line is that when you actually read what they did and how long it took to do it, what I don't get, well, I do get because power takes care of power. But the bottom line is that all these banks, you know what they should be doing, folks? The Justice Department should be going after them for the RICO statute. That's the real bottom line. Because this is a continual basis. This is not like they do it once. This rolls from product to product to product. And now what has happened is that we're all so used to it that we just think, oh, that's the way it is. And if, in fact, you get used to it and you get cynical for that, it will get worse. And as it gets worse, what will end up happening? What will end up happening is that that circle of folks that get hurt more and more and more will get larger, and guess what? Power consolidates even more, and you don't want that happening, folks, okay? Power consolidation is insane as it is, and you don't want it happening more. So I got to get a few politicians on here and really ask them the context of, when you're doing deals like that, does that mean now that you only need bread to get off of something? And because the $220 million is nothing compared to the amount of money that they basically took in. Okay, so we go over to these Dow stocks. The Dow stocks has some juice in them today, and if I take a look at the strongest Dow stock out here, so let's see. Well, I'll pull the second strongest one because we'll pull Boeing. So Boeing was the strongest Dow stock out here today. We take a look at Boeing and see where she's shaking out. Boeing right now, Boeing goes up, she's trading at 152.70. I see what she's doing. Oh, cool. Okay, so this is going to be a good heads up for Boeing and for the markets for us. Boeing has a high volume swing point. That high volume swing point is 158.83. Right now you're at 152. The bottom of that is 153.80. We did 3.7 million shares today. Now this is how an equity should operate. Meaning when we came down on the 25th, but you're going to see that this equity came down with lighter volume than it went up with. Or actually about the same amount of volume. It came down with 3.74 million. Goes up with 3.75 million, 7.2 million rather. So it come up with a little, like 100,000 less. Bottom line, though, that's how an equity should operate if, in fact, it wants to go to higher price. Now, what you can get out of this, as Boeing goes into the 153 to 158, at that particular level, that was a spike high. In fact, that was the day they came out with their numbers, I believe. And yeah, it's went from 153 to 158, and then it basically opened lower the next day. That level right there has 9.3 million. So as we get up to that level, you want to watch it like a hawk, because if Boeing can't handle that level and you get lighter volume, you get a rejection of price, those are the things you want to set up, because then the B2C or the window dressing would be over. If we go take a look at Microsoft, what you're going to see with Microsoft, folks, is building cars to go downtown. And it's a heavy one, man, because Microsoft already gapped away once. And when you gap away, the danger is always that you're going to gap away again. Microsoft had gapped away from $47 to $42 on the 27th of January. Now what it's doing is building cars to get into that swing low out there that's at $40.23. Visa is another one. Visa has been a really strong candidate. And what you have with Visa couldn't get any traction out here today, too. It's a big deal. Visa's at $65. She wants to run into 63 to 61. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back with our man, Mr. Chad from TD Ameritrade. He has the best options show on the planet that is broadcast every Tuesday here, 12 to 1 Eastern Standard Time. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up by 263, NASDAQ up 56, S&P's up 22. And as we do each and every Monday, folks, at 35 past the second hour, we have our man, Mr. Chad Coker from TD Ameritrade Think or Swim. Chad, folks, has the best option show on the planet. It's right here at TFNN every Tuesday, 12 to 1 Eastern Standard Time. Now, you can get all the programming at TFNN right on your cell phone. We program live from 8 o'clock in the morning to 6 in the afternoon, tfnn.mobi. That gets you the audio. You want to get the video, TV, plus the audio, just go to tfnn.com, hit the banner on the right-hand side. You see a little box that said mobile devices. You hit that device, You'll get the audio, plus you get the video. And as you're over at TFNN, if you haven't test drove the Thinkorswim platform, go do it. Okay, it's an outstanding platform. I use it every day, whether you're trading options, futures, commodities, or currencies, folks. It's all on one platform. It's fast. It's furious. Great platform to trade off of. You can set up the account. They'll put paper money into your account so you can see how the platform works, number one. And then as you're on that platform, you know, Chad, the whole Thinkorswim team, TD Ameritrade, they're out there helping traders every day. It's a great education site, period. They have huge amounts of videos. And if you do happen to be in Las Vegas, the next Traders Expo, folks, is going to be May 12th and 13th. And, of course, you can go out there and visit Chad and tell him you're a tiger. You'll be growling and prowling with him. Chad Coco, what's going on?
How's it going, Tom?
How you doing, man?
Okay, pretty good.
So, hey, listen, first off, has spring come into Chicago yet, man?
I think we're like 50 degrees today. So
Oh, that's good. That works.
slowly making it.
50 degrees works. That works. Okay. I like it. I like it. So, what are we going to be talking about this week?
Tomorrow we'll be talking about option pricing and then rolling options or rolling your spread. So when do you determine if it's too late to try to roll or if there's even worth in that?
Okay.
And strategies around that.
So let me ask you something. So, you know, you hear many times that the roll, so when we're talking about a monthly, what happens, folks, is that every third Friday of the month, that's when options expire, right? So when we start talking rolling, when do you like to see the roll happen?
So if I'm seeing a position that's starting to test my short strike, so if I have like a week or two left my spread and it looks like the stock's going to come up to where my short strike is,
okay,
that's when I'm going to take a look to roll, because I don't want that extra risk on that. Kind of take my profits when I can and see if I can extend my trade out a little bit farther, give me a little bit more time to be right.
Yeah, that's pretty cool, man. So, and what happens, of course, on the Thinkorswim platform, when you're putting on, that's not sophisticated, but you can roll basically from one spread to another spread, right?
I definitely can, yeah. So you can roll from make it the same trade, just one expiration longer, or you can go up or down in the option chain. So if you're starting to think that this is a good trade, but I think it'd be better if I was at a different price point, you can adjust the trade at that time when you're rolling over.
Yeah. Now, that's really crucial. I guess, you know, if we went to the life of an option trader, when people are just starting and then they get a little more, you know, understanding of the options, the rolling aspect is really crucial, right? Because you're kind of massaging that trade, right?
It definitely is, yeah. So if you have a position that's going against you, or you can see that it's still in your favor, but it could potentially end up blowing up in your face.
Yes.
The ability to fix that before that happens is really crucial when it comes to options trade. You don't have to wait for it to expire and just lose everything put into it. You can adjust it on the fly and turn it into something that you're a little bit more happier with.
Yeah. Those adjustments, so inside a trader, really starting to understand how those adjustments can be made. I know that they can listen tomorrow because we're going to be talking about that, right? Mm-hmm. Now, on the Thinkorswim platform, there's videos there that they could look at also, right?
Oh, we have tons of them, yeah. Hours upon hours of education around that, specifically on this topic as well.
Yeah, because I can see how that topic in itself, and you know what's kind of cool, Chad, right? Have you found, okay, is it easier for a trader, okay, you've been doing this a long time, is it easier for a trader to roll even when they're in a losing position, or is that still a tough deal to do?
I mean, you definitely can, but it comes to a point where you need to analyze that rolling trade. So we give you the tools to do that, to see if I roll this trade, am I still going to be underwater, or if you can roll and get a credit on it so you can roll and take in a little bit of premium in that when you have your losing position, might be worth it. Each trade is going to be different, though, so you really need to take a step back, look at the position you're going to end up with in the long run.
Yes.
If you're taking a losing position and you're rolling it just to give you more time and you're really confident that it's going to work out,
yes,
then definitely do it. If not, it might be time just to cut that trade and move on to the next one.
You just brought something up that's really cool, though. So there's a tool inside Thinkorswim that will tell you what the roll is going to cost you, basically, if you get a credit. And I guess inside that context, depending on the volatility inside the marketplace, it's possible that you actually could get a credit if the volatility has probably gone up, huh?
Exactly, yeah.
Yeah.
So if you have a news event or something coming up the next week where volatility is going to bump up, or if you're looking at last week, looking into this week, or actually 2 weeks ago when the Fed announcements were coming up.
Yes.
A lot of volatility built around the options that expire in that particular week.
Yes.
So if you had a losing position that's expiring the week prior, rolling it over, you might be able to get an extra premium out of that just because the higher volatility in the back series.
Wow. What an intriguing market, huh, man?
Yeah, definitely all over the place.
It is. So let me ask you, how did you get into options?
It's hard to say. So really, I was looking to always be a broker, and it never really happened.
Yeah.
I was working as a sales manager for Best Buy, selling products to just different companies.
Okay.
Sold a bunch of stuff to Think or Swim before TD bought them.
Yeah.
And I was like, hey, you guys hiring? I'd love to get a job. Came over here, kind of fell into it, and started trading from there.
What a perfect place to fall into, right? Oh my God.
Wonderfully.
And folks, if you've never, and I've been there many times, folks, and this is, so, large broker dealers, folks, have basically the inclination that, they're collecting money on a continual basis. Think or Swim, TD Ameritrade, flat out is a trading place, which is so cool because the amount of people that actually know a huge amount, you must have just fell in heaven, right?
Yeah, it really was. I was always trading stock, and then when I came over here, just sitting with the former floor brokers, it's like I can pick their brain every single day. It's wonderful.
Yeah, no, and it has to do it, and that's why I'm asking you so many questions about the spreads, because I can see them. I'm watching them a lot more closely, just moving them out, and I'm saying to myself, well, this is getting more interesting, because what has happened inside this option market, it keeps getting tighter, and it's like, well, why trade equities when you can trade options? You just want to learn more about them.
Exactly. Yeah. Actually, I don't trade equities unless I can't find a liquid market in the options market for it.
Yeah, totally, man. Listen, folks, the show's tomorrow, 12 noon, 12 to 1 Eastern Standard Time. Great show. Join Chad right on your cell phone, folks. The cell phone works great, too, by the way, and it works great on Tiger TV. It's pretty amazing. The visualization, we have a brand new HD studio. We have 2 of them, and it comes in beyond belief. Chad, you have a great night, a safe night, and, of course, we look forward to the show tomorrow.
Thanks a lot. Glad to be here.
Okay, man. Have a great one. That's 12 to 1 Eastern Standard Time tomorrow, folks. And what you do have, when you come into, so here's a perfect situation. What you have out here today is this. Market goes up, okay? The volatility comes out of the market in an incredible way. When that happens, folks, okay, what you want to be over if you are in that option market is that you want to be looking for the equities that you like, because whether it's a put spread, a call spread, whatever that is, the premiums have gone down dramatically. And if you think you basically have something at a swing point, that's where you want to put those trades on. What I expect you're still going to get out here, which is really cool, is that we've had volatility spike. It stays spiked 1 or 2 days, it seems, at the most. It flattens out again. Guess what? If you're set up for the next spike in volatility, and this is what ends up happening, which is just amazing in the context of the option market, you actually can be wrong on the direction on a spread, but if the volatility comes in, you can base the volatility will save that position. As Chad was, well, he wasn't talking about saving that position. I'm saying it will save that position, because what happens is that as the spread gets bigger, that position will stay in the money. Then you can decide that, okay, I was wrong in the direction. I have the amount of bread. I'm still up in the position. Then the key will be, do you roll it? Do you close it? What do you do? All of the above. So Chad will be on tomorrow, folks, 12 to 1 Eastern Standard Time. Market-wise out here, silver. Let's go take a look at the silver market. What silver did out here today, folks, back down with dramatically lighter volume. Silver still wants higher price. Pretty impressive in the aspect of where we've been right now in the market and the context of the dollar index going up those 700 ticks. What silver did today is that back down with 30,000 contracts. That 30,000 contracts back down 36 cents. You're going into the monster sign of strength on the 20th. The 20th, we had 60,000 contracts. So picture, you're backing down with half the amount of volume. 36 cents is basically a lot. That's how the silver market likes to trade. Silver is set up right now, first off, to make the run into the 1743 area. That's what we spiked up last Thursday, and I suspect what you're going to see is silver's going to make that run to 1839. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 263. Nasdaq up 56. S&P's up 22. Gold down $15. Silver up 36 cents. Bonds, the 10-year flat. 30-year down 24 ticks. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Let's take a look at Tesla out here. Now, this is going to be pretty wild watching how this thing shakes out, and this is why. Tesla, folks, was up 557 today. Now, Tesla's come off the high of 291. It was down $100. But I want to show you what it actually is doing, okay? Because Tesla, I suspect, is going to be a dead cat bounce here. But I want to show you, I talk about price and volume all the time. And volume, what happens is that when you're coming down hard, if you're coming into volume, well, guess what? Volume can help the equity stop on its tracks. Now, Tesla is a classic, and this is what it is. So Tesla's been on a non-stop route down $100. Well, when you take a look at Tesla's chart, what you're going to see, and this sticks out like a sore thumb whether you've looked at volume or not. It sticks out, and it's huge. The week of November 4th of 2013, Tesla had a monster volume. Now, when it had that volume, it traded from 181 to 132. Now, what was happening there is that, yes, it was going down, but because, I talked many times about the high of the low volume, of the high volume swing bar, what happens is that markets, when they're coming back down, they'll come into that level, and that's a huge level of support. First time, only because that's what building cause is all about. Well, what you're going to see with Tesla is this. As Tesla came into that level, that top of that level is 181.43. Now, we had volume there, okay, of 111 million shares on a weekly basis. Well, how do we come into that? Well, folks, we came into that with 24 million shares. So you get 24 million going into 111 million. What do we have? You had a rejection of price, dramatically lighter volume. You're talking about 75% lighter volume. And you're talking about that type of lighter volume after you've had a vicious downdraft. Okay, so now what does that say? So check this out, because this is going to be pretty cool watching this shake out, particularly because Tesla itself came down hard. Now, you wouldn't want to go short the equity because there's 28% short position inside the equity. But I want to go through this exercise so you can understand how these markets move and the volume characteristic inside the market and where you should bounce to. Okay, so when we take a look at Tesla, what you're going to have is this. It couldn't break the lows of 193.07. Okay? You got down there. It basically did $5 today. What I expect you're going to see tomorrow, it'll be back inside that 193. That's kind of how it's set up. We'll see whether it takes shape, but that's how it looks to me it's going to be set up. Okay? Now, that being said, where's going to be the run? Well, what you have is this, is that, and this is where it's a little subtle, but it was pushing with volume. On February 9th, the week of February 9th, you pushed with volume going into 220. Well, that's your range. And what I suspect you're going to see is that Tesla now is going to start to try to push into that 220 range. The bottom of that is 193. We're going to be there in a heartbeat because today basically was acting pretty good. So we'll see how it gets into that range. If you get in that range and you have lighter volume, all that has done is that spot going all the way back to the week of November 4th of 2013 stopped at the first time. If it's going to break that down, what you'd see is this. As you get into the high of 220, you're going to see the weekly volume decrease from 40,000. That's 40 million, rather. You'll see that decrease. You see a rejection of higher price. You'll see lighter volume, and then what you'll see as it starts moving back downtown, you will see an expansion of volume as it tries to basically break down that whole level. So it's going to be really wild watching how this thing shakes out, because what you certainly have, you got to expect that you would get a dead cat bounce. You know, the 28% short position in Tesla will give it some juice, because what would end up happening is that traders in general will say, hey man, this is nice, we can run this thing. We particularly could run this thing on a weekly option expiration, and you know, a 0.382 bounce is 223. A 5.0 bounce out here is a big one. A 5.0 is 223. A 0.382 bounce is 213. But you watch how that baby shakes out. But what I do expect is that you're going to get some kind of a bounce out of this. More than likely, you're going to see it's going to be on lighter volume. That's going to be the setup. And what that setup's going to get you is the next leg down inside Tesla, because the way that Tesla is set up on a much larger basis, when you put this on a monthly, what you're going to see, which is sticking out like a sore thumb, is you're going to see the low of that 181. And this is why it's so crucial. The low of that 181. So where it stopped right in its tracks is at 181.43. Well, the low of that, if you get into that 181.43, the low of that, that's where the problem can be kind of severe, because the low of that turns into 116. So Tesla's going to be a wild one to watch in general. Over in the Dow Industrials, Intel's a big problem. Microsoft's a big problem. Microsoft, we look at Microsoft for a second. Microsoft is really interesting because Microsoft's been on a tear, I mean, for a long period of time. And Microsoft just fell out of bed. You know, we take a look at Microsoft. What you see with Microsoft right now is that we put this on a weekly basis, and Microsoft not only wants to go lower, but this very well could be a very large ABC structure on the way down. It's like, okay, what the heck's going on with Microsoft? You know, this thing has been on a tear from a price point in 2012 was at $26. Yeah, it did a double, went up to 50. It's trading down 20% already, but it's how it traded down. That when it spiked from 47 to 40, huge problem. You know, we'll see whether it can hold that 40.35. It's looking that it's building cause to break that. You break the 40.35, and you're going to see Microsoft laying out there at $36. $36 on Microsoft. That's going to be quite a hit coming off that $50 area. And if Microsoft is coming down into that level, it's like, okay, what else is going to get sucked down with it? Visa's a big one. Inside the Dow Industrial, Visa is also a big one. Visa is basically strong, but that's a big one. The financials in general, folks, the financials in general, if we look at the XLF, the financials in general are a lot weaker than they should be in this market that went topside. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Go get them, folks.